Hello and a very warm welcome to this webinar hosted by Delta EE. We are really delighted to have so many of you joining us today. We have had over 500 registrations, so thank you for making the time to join us today. Now I can see that there are still some people dialing in, but given we're now past 10 o'clock UK time, I think we will make a start. Today we are going to be sharing highlights from the research we have been delivering over the last few months for subscribers of our EV charging research service. But before I go any further, let me introduce myself and my colleagues joining me on the webinar today. I am John Murray, and I'm joined by my two colleagues, Kate Armitage and William Vanderbilt. So Kate, Will, are you there?
Morning everyone. John, yes, we're here.
Okay, good. Yeah, can hear you both loud and clear, so the technology is working. Thank goodness for that. Will is the manager of our EV charging service. All the content we provide today is being taken directly from this research program. And Kate, you're an associate with a wealth of experience in the e-mobility sector. And my role is head of EVs, leading the team we have here at Delta EE. And yeah, we're really excited to be sharing some of our latest research findings with you. Some brief housekeeping before we get into the content. We're aiming to talk for about 45 minutes and then with some time at the end for Q&A. You can write down your questions or comments in the box that should be on the right-hand side of your screen. So please feel free to submit your questions at any time, and we will possibly answer some of those throughout the webinar, but we'll certainly get to those at the end. The webinar is being recorded, and so you are able to get the webinar recording and also the slides that they'll be sent out to all attendees afterwards. In terms of the agenda, I'll make a quick introduction to the company and to our service before going into the discussions around our forecasts, both in terms of the vehicles and also our charge point forecasts. We'll present some of the results from our annual EV owner survey that we conducted earlier this year, before discussing some of the key trends that we expect to see in the next 12 months into 2022, and then of course some Q&A at the end. So for those of you that don't know the company so well, I know that most of you will be familiar with Delta EE, but for those that don't know us so well, we are a research and consulting company. We are immersed in the transition, the energy transition from old to new energy, and we're delivering content to our clients in two different ways. We have subscription-based research services, and we also deliver bespoke consultancy projects. The service that is of most interest to Kate and Will and myself is the EV charging service, and this is where we're providing ongoing insights, data, forecasts to our clients on what's happening across the e-mobility space in Europe. This slide is just showing you at a high level the scope of the service. Essentially, we are helping to support companies develop the right strategies and propositions and products to succeed, and the service is providing insights and data, market intelligence on the sector. We divide our content into four key pillars. So we're looking at the home charging segment, public charging, we're looking across the fleets, and smart charging, which is looking at topics such as V1G, V2G. And within that, we're providing lots of customer research and data and qualitative insights and opinion to our subscribers. And like I say, the coverage of the service is Europe-wide. So all of the content that we'll be providing during this webinar is taken directly from this service. If you'd like to find out more about how the service can help you, then please get in touch with any of us after the webinar. So the first thing we'd like to talk about is our European EV uptake rates. And earlier this year, we published our revised forecasts for the number of electric vehicles that we expect to see on European roads by 2030. And this for us is a really critical factor that we need to consider when we are developing our future view on the charging infrastructure that we expect to be rolled out. And we'll talk about that a bit more later. The headline is that we expect around 84 million EVs on European roads by 2030. And this is considering battery electric vehicles and plug-in hybrids and also electric vans. The blue bar charts are illustrating the growth of total EVs on the road and is linked to that left-hand axis. And the right-hand axis is showing the market share of new EV registrations on a yearly basis. And we are forecasting that by 2026, that is the year that new EVs will outnumber new ICE vehicles for the first time in Europe. And that by 2030, almost 90% of all new vehicles will have a plug. Not necessarily fully electric BEVs, but at least plug-in hybrids. So what is driving this huge growth that we have seen? First, let's consider what we saw happening last year in 2020. Essentially, from 2019 to 2020, there was a step change in EV sales across Europe, with more than twice as many EVs sold last year compared to the year before. In the UK, EVs achieved over 10% of new car registrations. In Germany, it was 13%. In the Netherlands, 25%. These were numbers that we couldn't even have considered a couple of years ago. And this growth came despite a more than 20% drop in car registrations because of COVID and the associated lockdowns that we were all under during some stage last year. So essentially, the starting point for strong EV growth rose sharply last year. But we've also seen the end point, essentially the point at which we no longer see new ICE vehicles come onto our roads, come towards us. And it's coming towards us much more quickly than anyone was anticipating even 1 or 2 years ago. At Delta EE, when we think about this growth being driven by 3 macro drivers: the policy and regulatory framework, market push, i.e. the car manufacturers and their ambitions to phase out ICE vehicles and electrify their new models, and finally customer demand. And I'll talk through each of these briefly. So on policy and regulations, in previous years we've seen national governments implement incentives and tax saving mechanisms to incentivize the uptake of EVs, and nowhere has this been more successful than in Norway, where over 80% of all new car sales are now plug-in. So phenomenal growth rates in Norway over the last years. And we've also seen in the UK government set the target of 2030 as being the year when no new ICE vehicles will be sold. And the Dutch government has gone even further and is demanding only zero-emission cars from 2030. The European Commission introduced their Fit for 55 package, which is likely to see the ban on all new internal combustion engine cars, plug-in or otherwise, by 2035 across the whole EU. But these targets can't really be achieved without the vehicles, and this is where the industry plays its part. Now, the car industry is bracing itself for unprecedented change, really. The established car makers are facing the prospect of having to completely re-engineer their manufacturing processes, redefine their vehicle portfolios, overhaul their brands. And in previous years, the car makers have been resistant to going electric and committing to that enormous capital cost. But the reality is that the transition to electric has been on the horizon for many years, and the auto industry has been gearing up for this long before now. For the last 12 to 18 months, we've witnessed really a paradigm shift from the car industry like we haven't seen before. And so the car manufacturers have been redoubling their ambitions to embrace this race to go electric. VW has committed to 70% of all European car sales being electric by 2030. Ford has said they will only sell fully electric cars in Europe by 2030. And there have been many other announcements by brands made both throughout this year, and we expect more to come in the future as well. Finally, customer demand. And we've seen customer demand outstripping the supply of EVs consistently over the last years, driven by falling costs, an ever-increasing supply of new models, and a growing appetite for drivers to go green. And so when all these macro market drivers are pulling in the same direction, we're seeing very rapid change, and that's what we've been witnessing over the last couple of years, and that's what we expect to see to continue over the next years ahead over the course of the decade. But let's now compare what we've seen happen during the course of this year, during 2021. So I'll put you onto the next slide, and Kate, keen to get your thoughts on the tail of the year so far.
Thank you, John. So when we put the EV take-up forecasts together earlier this year, it was quite an aggressive position. So it's quite useful to have a look at actually how are our forecasts holding up midway through 2021. So what you'll see in this graph is from left to right. We've got the 2020 actual take-up of PHEV and BEV expressed as market share, so total new vehicle registrations, starting with Germany and then moving across to France, the UK, Netherlands, and we've included Norway because the results are so remarkable. And what you can see is what we'd forecast for the year end in terms of market share and where the market share is at the moment. Germany, France, and the UK, we're very happy with, and actually the Netherlands appears to be down on forecast, but always has a very large boost of new vehicle registrations in December, which is when we see a lot of the PHEVs and BEVs coming in. So we actually see that as on track as well. We've included Norway in this graph, as you can see, reaching over 80%, and in March of this year, Norway actually achieved 85% market share for new vehicle registrations, which is remarkable. However, statistically, the absolute size of the market is relatively small in contrast to Germany, which is the biggest EV market. We would have looked at actual vehicle registration numbers, but as I've mentioned, it's quite difficult to track mid-year because we do our forecast as an annual number, and it's a tale of there's two sides to look at this, I would say, in terms of the forecast. So we have seen continual supply chain failings as a result of the pandemic, weakening the supply chain, and probably most notably is the global shortage in semiconductors, which has also affected ICE as well as plug-in vehicles, but this has depressed vehicle sales across the board and has forced some production lines to temporarily shut down, and the impact has been that delivery times for EVs reportedly moving from 3 months to 6 months. On the positive side, John has already alluded to what the OEMs are doing, and there's clear evidence that they're not waiting for governments to legislate the timeline for zero emissions, which is extremely positive. And since we did our forecasts and published our white paper back in May, we've heard from Mercedes-Benz plans to go all electric by 2030, Fiat to become full battery electric from 2030, and Vauxhall Opel being more bullish and saying pure electric brand by 2028. So whilst the market share figures are a little bit hidden with the depression in vehicle sales, overall our bullish forecasts are standing up well based on OEM announcements. Over to you, John.
Yeah, thank you. And actually, yeah, so this is just summarizing where we're at so far versus our forecasts. And so, yeah, it's stacking up pretty well so far. Now over to you, Will, to introduce some of the insights from the forecast we've been developing on the charge point side.
Thanks, John. So, yeah, we've discussed EV uptake in Europe, but what does that mean for the charging infrastructure? And that's something that we focus on quite closely at Delta, and we've developed granular charge point forecasts for the 4 big European EV markets, the UK, Germany, Netherlands, and France. And these forecasts are across the 3 key charging locations, which is home, workplace, and public. So on the next slide, we see how the EV charging infrastructure develops over the coming decade, which is driven by the growth in EVs on the road that we discussed. And as you can see, we expect the total number of charge points installed across the 3 locations to grow significantly over the coming decade, resulting in nearly 30 million charge points installed by 2030, which is more than 20 times the number installed today. However, even with the strong growth in charge points, the charge point market doesn't keep up with the growth of EVs. As we can see on the right-hand side of the slide, which details the EV to charge point ratio, so how many EVs are there per charge point. And you can see that this grows from 1.46 EVs per charge point in 2020 to 1.8 EVs per charge point in 2030. So in other words, there are more EVs coming onto the road than charge points being installed. And there are a lot of interesting ways to segment the data. And on the next slide, you can see that we have segmented this total number of charge points by charging location. So on the next slide, please, John. Thanks. So you can see that 28 million charge points, it's segmented by location. And the first thing that jumps out is how dominant the home charging segment is in terms of charge point volumes. And the table on the right of the slide provides the market share percentages for each location. So you can see that the home market share actually increases by 6% over the decade to account for over 70% of charge points installed, and the public market share decreases by 4% over the decade to result in a 10% market share. And this is primarily due to what we call the economies of scale effect. So typically one home charge point is used to charge 1 or sometimes 2 EVs, whereas one public charge point, particularly rapid or HPC charge points, can be used to serve multiple EVs throughout the day. So in other words, the EV to charge point ratio is lower for home charge points than it is for public charge points, and hence the growth in market share of the home charge point segment. Over to you, John.
Thanks, Will. Yeah, and I've just been monitoring the questions. There's been a couple of questions around the effectiveness of looking at the ratio between EVs and charge points, and views on the utilization rates of charge points, and maybe I'll touch upon those in the next couple of slides. What I'd like to do now is delve a little bit deeper, first of all, into the method that we've developed for generating our charge point forecasts. And in fact, we have not one but 2 methods that we apply to ensure that the numbers we are publishing are as robust as possible. So I'll briefly talk you through those methods and then present some of the results on the next slide. Not just in terms of the number of charge points we expect to be installed in the years ahead, but also how this translates into energy demand and even the overall revenue generated from electricity sales across the different charging segments. First of all, we have what we call our top-down method. And essentially, this is where we are considering the overall EV vehicle park. And in this case, we're considering, well, like before, BEVs, plug-in hybrids, and also electric vans. And we know how many EVs are on the road in Europe, and by applying assumptions on the number of kilometers that are driven across the whole vehicle park each year, the efficiency of these vehicles, and by looking at charging losses, we have to remember that it's not 100% efficient when you charge up the vehicle. We can estimate the amount of energy that is required to charge up these vehicles over the course of the year. And this overall energy demand is a really important figure that I'll come back to shortly. So this is what we refer to as our top-down method, and we can do this on a sort of country-by-country basis. And then we have our bottom-up method. And this is where we've built up a really clear view of the number of charge points that are installed across the different location segments. And we look at 6 key locations. So we look at home, 3 different public segments. So we look at on-street, destination, and what we call transit. And so transit is the location which is typically those high-powered charging hubs along motorway service stations and things like that. And then finally, we have two workplace segments, return to depot and employee charges, so those charges that are available for commuters who drive to work during the day. We derive these numbers through a combination of research methods, including EV owner surveys, our own primary research and interviews with industry stakeholders, and also reviewing public resources. The EV owner survey is particularly important to help us understand the home segment and how many EV owners have a dedicated home charge point or wall box installed at their home. Once we have gathered the data on the number of charge points, we can then apply assumptions on the utilization rates of the charge points across the different segments and the average speed of those chargers, and this ultimately allows us to determine the total energy demand on a per location segment. And it's at this point where we can compare the top-down energy demand with the bottom-up energy demand, and they should match closely, and when they do, we can be confident that the number of charge points is a robust reflection of reality. When there's a mismatch, and this happens sometimes when we're running these numbers, this indicates that it's necessary to refine the analysis, and we carry out iterations of the analysis until a time when the top-down and bottom-up methods are returning consistent results. And we apply this methodology both for our analysis of the existing charging mix and also our future projections. When developing our forecasts, we're considering a large number of different factors. We've listed a few examples on this slide here, but there are many others, too many to mention really on this slide. But to give you a taste, we're looking at government policies, the plans of the vehicle OEMs, looking at the building stock in different countries and things like that. If anyone has any specific questions on how we develop the forecasts, please feel free to ask in the chat, and we can try and cover these towards the end of the webinar. But now I'd like to show you some of the results from this energy demand modeling. So there's three different ways and three lenses, if you like, that we can look at when considering the overall charging mix. And so the first is by comparing the number of charge points. And so this is really the key thing that we are trying to derive when we're doing our forecast, is looking at how many of these charge points we expect to be rolled out across each country and across each individual segment. On this slide, we are presenting aggregated figures, combined figures for Germany, the UK, France, and the Netherlands. The left-hand pie chart is showing the split by the 6 key locations in 2020, and the right-hand side is showing our forecast for 2030. Across those 4 markets, we are seeing about 1.3 million charge points across those 4 markets last year, and we expect this to rise to around 28 million by the end of the decade. As you can see, the share of public charge points is actually decreasing from 14% in 2020 down to 10% by the end of the decade. So at a very high level, this is due to our expectation that the ratio of charge points to EVs will fall over time as the industry matures. And this ratio needs to fall really in order to increase the utilization rates of the public charging networks. And so that investing in public charging infrastructure becomes a profitable endeavor. Which leads me to the next row. And so by applying assumptions on the utilization rates of the charge points and their relative speeds, we can estimate the overall energy demand like I discussed earlier. In 2020, these 4 countries had an overall energy demand of around 4 terawatt hours. This will grow to approximately 143 terawatt hours by 2030. And so even though the share of public charge points is falling through the lens of the number of charge points, we expect that from an energy demand perspective, the public segment to increase market share from around 26% today to 39% by the end of the decade. And this is down to 2 things. It's down to the utilization rates of public charging infrastructure increasing, and also the speed of those charges likely to trend upwards over time, especially in the transit segment. Finally, the third lens, and this is the revenue that we are calculating from retailing electricity. And so by applying assumptions on the price that electricity is sold at across the different segments, we can estimate that the revenue from retailing electricity was around 868 million euros across those 4 markets in 2020, increasing to 33 billion euros by 2030. And the transit segment is likely to be the segment that grows to have the largest slice of the cake, if you like, by then, accounting for around about 11 billion euros of electricity sales by 2030. So you can see that depending on which of those three lenses you look at, the charging mix can look quite different. So that's all I wanted to discuss on the charging mix, but I do know there's a lot of content there, and I'm sure there's a lot of questions, and I've seen some come in, and we'll try and get to those at the end. But please, yeah, let us have your questions or get in touch afterwards to find out more about how we're assessing these different segments. So now some of the key takeaways that we've been developing, specifically related to our forecasts. So Will, I think you were going to talk about some of the trends that we're seeing, particularly with respect to company cars.
Thanks, John. So yeah, we've presented the numbers, but what do those numbers mean for the industry? And the first key takeaway I'd like to highlight is the dominance of company cars within new EV sales. So the table on the left-hand side of the slide provides some data on this. And as you can see in the right-hand column of the table, within the sales of new BEVs and PHEVs, company cars account for more than 50% of sales in all major European markets. And we can expect this percentage penetration to increase moving forward. And one reason for this is the government regulation, which increases the attractiveness of electric company cars. So for example, in Germany, the private use of a fully electric company car is taxed at only 0.25% of the list price per month, compared to 1% for combustion vehicles. And you've also got, for example, the benefit in kind tax in the UK being 1% for EVs, compared to over 10 or 15% for combustion vehicles. And you can see we've included the company car penetration for all vehicle types in the UK and France for reference, just to show how much more dominant electric company cars are within new EV sales. So what are the knock-on effects from this? So firstly, the high churn rate of company cars, say 3 to 4 years on average, means that the increasing penetration of electric company cars will stimulate the second-hand market for EVs in the short term. And the development and maturing of the electric second-hand market will be a massive boost for the EV sector, and will have its own impacts, such as, for example, the route to market for home charge points. And the second knock-on effect is the increasing penetration of electric company cars will result in employers having to provide charging options for the employees. And Netherlands is a really good example of this. On the next slide, we illustrate this a bit more. So you can see this slide shows the EVs on the road versus the number of employee charge points. And you can see for Netherlands, it's got the lowest number of EVs on the road, the solid orange line, but it's got the highest number of employee charge points, the dotted orange line. And by employee charge points, we mean charge points at the workplace. So for example, an office building. And one of the key reasons for this is the high penetration of electric company cars within the Netherlands, 75 to 80%. So this is a trend we can expect to continue and also have an impact on other markets like the UK, France, and Germany. And the second key takeaway for workplace charging is that players have noticed the growth and importance of the electrification of fleets, and they're responding accordingly. Specifically the big players, so the utilities, the auto OEMs, the oil majors, the leasing companies. They're trying to offer fleet customers a one-stop shop solution. And what do we mean by one-stop shop? So that's covering all 7 core elements of the fleet proposition, from feasibility studies to offering the charging hardware, to offering the back office, to offering public charging access. And this type of proposition, the one-stop shop, it mirrors the service fleet managers are used to for combustion vehicles, and it's increased in popularity over the past couple of years within the electric fleet market, and we expect this growth to continue. And as the diagram shows, you can see that these big players, they're able to offer this one-stop shop through a combination of partnerships and and acquisitions. And one interesting observation is that this intersection between the energy sector and the automotive sector due to the electrification of transport has created a really interesting competitor landscape. We now have leasing companies, auto OEMs, utilities, oil majors, all competing against one another for the fleet customer, which is a really exciting space to be in. That's it from my side, John.
Thanks, Will.
Okay.
Yeah, over to you, Kate.
Thank you, John. Picking up then the conversation and just talking a little bit more about the public charging. So as we've already said, by 2030, we think the overall percentage of public charge points across those 4 countries, Germany, France, Netherlands, and UK, will have dropped from 14% to 10%. There is detail within that. So at a country level, the public charging actually varies from as low as 8% to as high as 19%. And the reason for that variation is linked very closely to home and workplace charging and the availability of those, where public charging effectively fills the gaps. We've mentioned also the 3 segments that we have in mind when we talk about public charging. So for the purpose of the forecast, we've split it by on-street, by destination and transit, and we also have further segmentation by speed. We express public charging in a ratio in the same way as Will has talked about before, but as a ratio of just the public charge points. And over the decade, we are going to see that ratio increase, with the exception of the Netherlands. Germany has the highest increase in ratio, so it will go up to 20:1 by 2030 in our forecast. And the reason for that, we've highlighted on the graph, is that apparently small but very, very significant transit segment. So Germany will have almost 90% of all its public charging in 2030 will be transit. And implicit within that is very high speed charging. The reason that we've put this focus on Germany is because they have this really ambitious transit charging program and a large funding program in place of 2.3 billion euros by 2025, which is supported very strongly by the OEMs. So it's a combination in Germany of needing less charge points, but having them located on the transit and utilising very high-speed charging. So we really are looking at HPC up to 350 kilowatts and possibly beyond. Netherlands is slightly different. Again, we've highlighted that here. So for Germany, UK and France, destination charging is dominant by share, whereas in the Netherlands it is very much on street, making up 67% of all public charging. That, as Will has already called out with the Netherlands, they also have a very strong workplace charging segment, and both of these 2 things are compensating for the fact that they have a very low home charge opportunity with very little off-road parking. They have the most mature strategy as well for on-street charging, and that is supported by significant private investment from mobility operators such as Total Energies, Engie, Vattenfall and Ecotap. Back to you, John.
Thanks, Kate. There was a question actually that's come in just about the definitions of what we mean by transit versus destination. Maybe we can just say a few words on that.
Yeah, so transit is very much on the road mid-journey. So it would typically be a petrol station or a motorway service station, anything that's on the strategic road network. But it does also cover petrol stations.
And also a question around, will we see a high percentage of forecourts being transformed into EV transit stations in the UK? So I guess that's a strategic question around what the oil majors are going to do when they transition away from retailing fossil fuels to electricity.
Yeah, so we have got an increase in transit charging and HPC in the UK, not quite as strong as Germany, but there's plenty of evidence, as you say, John, from the oil majors of investment and statements of intent to invest in upgrading forecourts.
Great. Thank you, Kate. So now we're going to come on to talking about some of the insights that we've derived from conducting our annual EV owner survey. So over to you, I think, Will, to present some of these insights.
Thanks, John. So yeah, we perform an annual customer survey across the 7 European markets: UK, Germany, France, Netherlands, Norway, Spain, and Italy. And we've been doing this for 3 years now, and over the 3 years we have cumulatively surveyed over 2,200 EV owners, and we've just pulled out 3 key insights from the survey to share with you on today's webinar. And Kate will be presenting the first key finding.
Thank you, Will. So what we're able to do, because we've been running this survey for a number of years, is compare changing trends in responses. So on this slide, what we're looking at is the responses to the primary motivation for acquiring an electric vehicle over an ICE, and the answers that were given in 2017, as in they purchased a vehicle in 2017 versus those people who purchased the vehicle in 2020. And we're really highlighting here the motivation with regards to reducing my environmental impact, and that has become the top reason in the 2020, whereas saving money on fuel and tax and benefits has dropped down the list. And I think there are lots of reasons why that reducing my environmental impact continues to remain the primary motivation. If we think about what's happened in the last 2 years, the pandemic has really had an opportunity to focus people's minds on air quality and how much the air quality improved when the vehicles temporarily came off the road. And we're seeing at a local level a lot more low emission zones and climate emergencies being announced, and extreme weather events. All of those things are really keeping this environmental impact front of mind for EV buyers. And then the other one that I wanted to call out was I like new technology, which has gone from 4% in 2017 and really risen up to 16% of EV buyers being motivated by new technology. This has to be attributed to an improved choice of vehicles and the range, but really I think we're seeing a new layer of EV buyers coming in who have confidence in this technology and a newer level of consumer acceptance.
Thanks, Kate. The second key finding is detailing that the electrification of transport is blurring the lines between the energy and automotive sectors. And we've already mentioned that today, but our customer research highlights this again. And you can see this illustrated by the graph on the left, which details that 10% of respondents from the survey, so EV owners, have stated that they've installed solar PV after purchasing an EV. And given the projected uptake of EVs, which we discussed at the beginning of this webinar, it'll be interesting to see what knock-on effect this has on the solar PV market and distributed energy market if this percentage holds throughout the decade. And for any solar PV installers on this webinar, I think this graph really indicates that EV drivers are a key target market. And the graph on the right illustrates that 70% of EV owners have considered switching their home electricity tariff after getting an EV, of which 43% acted on this and switched their tariff. So that means overall around 30% of all EV owners have switched their tariff after getting an EV. And this makes EV customers roughly twice as likely to switch electricity tariffs than the average customer. You can see at the bottom right hand of the slide, you've got annual switching rates in 2019, and that's for the general population. So, for example, in Germany, the average annual switching rate is about 10%, but around 30% of German EV drivers switched their home tariff since getting an EV. So the line between the energy and automotive sectors is blurring, and this presents both an opportunity, but potentially also a cause for concern for both the auto OEMs and the utilities. And the third and final topic is looking at fleet charging, more specifically the reimbursement of employees who charge at home for work. And it's becoming an increasingly relevant topic for fleet charging providers as the electric company car continues to gain market share. However, we can see there's quite a lot of work to be done in this area, as only 30% of EV owners who charge at home for business get reimbursed by their employer. So when we segment this data by country, at a country level, it also provides some interesting insight because it allows us obviously to compare different EV markets. So taking Italy and Netherlands as examples, the two bars that are highlighted there, you can see the Netherlands, which we've already discussed as being a really developed European market for employee charging, has the lowest percentage, which is good. So only around 11% of drivers who charge at home for work don't get reimbursed, compared to, say, Italy, which is a bit of a less mature or developed EV market. It's got the highest percentage at 39%. So it's a clear indication that as the electric fleet market develops and matures, providing a solution which allows employers to reimburse the employees for charging at home is going to become a must-have and will become increasingly important. Back to you, John.
Yeah, thanks, Will. Yes, this is essentially showing, just interpreting this slide here, that because the Netherlands is such a mature market for employee, for company cars, electric company cars, so there's such a low share of folk that charge at home but don't get reimbursed. Yes, it's a really interesting observation, I think.
Exactly, yeah.
Okay, so the final slide of content is where we're just, each of us presented a 1-minute view on the 3 key trends to watch out for in the next 12 months. So I'm going to go first here. And the one I want to bring out is around keeping an eye out for new regulations announced at the national government level. Particularly relevant, I think, following the European Commission's publication of the Fit for 55 package, where the EU is looking to reduce emissions by 55% by 2030, moving towards that trend of net zero, of course, by 2050, and how the individual member states are going to implement policies to achieve that goal. Now, of course, the UK is no longer a member of the EU, but many of you will have seen the announcement at the end of last week that the UK government is planning to have wall boxes installed at all new build houses from next year. Now, my understanding is that this is still to go through Parliament, so still to be ratified, but I think it is a strong signal that wall boxes will be mandated for new builds in the relatively near future. So looking to see whether other markets in Europe will follow suit or introduce other regulations which are really driving at making electric vehicles much more accessible for both for customers that have off-street car parking, but also, of course, those that don't have access to off-street car parking, so may need funding or incentives for other charging locations.
Thanks, John. And for my key trend, which I selected, is sticking with the workplace charging and fleets, is the development of home charging solutions for fleets. And I think this is an area which will grow in two ways over the coming 12 months. So the first way is in market size across Europe, as company car penetration increases, and I think this means that the market will become increasingly attractive for players to enter. I mentioned electric company cars being a key driver for this, but I also think that COVID and the impact of flexible working and people working from home will make it increasingly important to be able to provide home charging solutions for fleets. And the second way in which I see this market will grow is in the growth of the proposition itself. I think it will develop and become more sophisticated. And by this, I mean that the proposition will include reimbursement for employees charging at home, will include energy management, such as smart charging. Also, for example, providing employees with access to public charging. And we're already seeing companies such as Mina Energy, PowerD, doing aspects of this individually, but I think we're going to start seeing companies offer propositions which combine all of these aspects into a single proposition.
Thank you, Will. My key trend for the next 12 months is really focusing on 50 kilowatt DC charging hardware, which really for almost the last decade has been the default rapid charger of choice. But my feeling is that 50 kilowatts is going to come under pressure from both sides, from both lower and higher speed charging. So I think we're already seeing a lot of the public charging transit operators moving towards 100 kilowatt plus high power charging, and that's only going to grow as we see vehicles with bigger batteries and capable of charging at higher speeds coming onto the market. And it comes back also to John's energy model, where the ability to increase utilization and turnover of usage in those charge points is going to become more relevant. But the other end of the scale is potentially seeing the 50 kilowatt DC market being eroded by more affordable 25 kilowatt DC charging. And this is particularly relevant for destination locations, pretty much anywhere where you have a dwell time between 1 and 2 hours. And of course, by downsizing the unit, you're able to offer twice as many drivers access to power at the same time. So I think it's really going to put the spotlight on making sure you have sized your charger according to where you are locating it to get the best possible return on investment.
Thanks, Kate. And well, a question on what we mean by affordable. So why are we saying that 25 kilowatts is more affordable, perhaps, than other options?
I mean, the units themselves are cheaper to install, and again, it comes down to being able to charge more vehicles utilizing the same power. So you may be able to. It may mean that you don't have to upgrade your EV infrastructure, and the other element of this utilization piece is that most plug-in vehicles, with the exception of some older Renaults and potentially some of the plug-in hybrids, are able to take a DC charge and maximize all of that power, whereas AC charging, as we know, is cheaper, but you can install a 22 kilowatt charger, but many vehicles can't actually get the full benefit of that. So it's in terms of spend for the unit, cost for the installation versus utilisation and ability to dispense power.
Great, thank you, Kate. So that ends the content. So thank you very much for your attention. But we've got about 5 minutes left at the end for Q&A. So please do stay on the line and submit your questions, and we'll try and get to a few of those over the next couple of minutes. I've seen that there's a number that have come in. One of the consistent questions we've been getting is the data that we presented earlier available on a country-by-country basis? And the short answer is yes, it absolutely is, but we are reserving that for the subscribers of our research. We can't give all the crown jewels away, so if you'd like to find out more about our country analysis, bottom-up analysis, please do get in touch afterwards and we can discuss how we can support you. So let's look at some of the other questions. So Chris, you're asking about the views on the effectiveness of the EV to charge point ratio as a measure of progress for national governments and local municipalities. So that's a kind of complex question, actually, Chris, because it depends very much on the individual segments. As I discussed earlier, when it comes to public charging infrastructure, the people look very closely, and it's a very important metric, I think, the ratio between the number of public chargers and vehicles. I think typically a 10-to-1 ratio is often used as sort of a metric to understand whether there's enough charging infrastructure in today's world. Of course, in the future world where we've got mass EV uptake, one thing that needs to happen is that the utilization rates of the public charging assets need to be at such a level that the investment plan for, or the investment case for public charging infrastructure makes sense. The utilization rates as they are today, it doesn't really make public charging investments that attractive. So inevitably, I think as the market matures, on the public charging side, the ratio between EVs and charge points will be that disconnect, where the rate of EVs is going to have to grow more quickly than the ratio of charge points. But this is where it comes down to making sure that the charge points are placed in the locations where there's going to be most demand. Of course, in these early years, and we're still in the early years really, there's a need to roll out infrastructure across all of the country that you're looking at, whether it's Germany or the Netherlands or the UK, and that will include putting chargers in locations which are not so attractive, but they need to be there to give drivers the confidence that they can charge when they're on their summer holidays, for example. But over time, I think the focus will be on putting charge points much more in the centres of demand, and that's where I think the utilisation rates will increase. But then the ratio between vehicles and charge points will grow as we see more EVs on the road. Of course, in different segments, those different ratios come into play in different ways. So if we look at the return to depot segments, so this is vans that go out during the day and then come back, that's much more of a 1-to-1 ratio. When we look at home charge points, of course, there's more of a 1-to-1 ratio, but of course you can have 2 or 3 cars using the same home wall box. So there's a bit of a disconnect there as well over time.
I think another important point to make there, John, is around the speed of the charge point for public charging. So on-street 22 kilowatt charge point will be able to service a lot less vehicles than a high-powered 150 kilowatt charge point. So the EV to charge point ratio is important, but you've got to take into account the speed of the charge points as well.
Yeah, absolutely. Well, there's another question here. Have we taken into account the Fit for 55 announcement to build the EV forecasts? Now, this is one of these things where the market is ever shifting. There are always new things to take into account. But actually, when we developed the forecast earlier this year, ahead of the Fit for 55 announcement, we were actually anticipating that there would be such announcement made. We didn't know, we didn't have an inside track necessarily in terms of what the exact details would be, but we did anticipate that during the course of this year, there would be more stringent targets, introduced more ambitious targets from the European Commission. So actually we did take that into account when we developed the forecasts earlier in the summer. And I think our view is broadly consistent with what was announced back in June or July, whenever it was. Just looking through some of the other questions. Yes, the recording of the session will be available afterwards. That will be sent to you.
John, there's a good question here around this charge point forecast and how dependent they are on grid upgrades or increased capacity. And I know, Kate, this is something you've been looking into recently. Do you have a view on that?
Yeah, thank you, Will. So one of the questions when we were developing the public charging forecast and specifically looking at transit charging and the funding that has been announced. I mentioned the funding in Germany, but similarly the UK has a rapid charge fund and France has announced I think it was 100 million euros investment towards transit charging. So the money is there, the desire is there. One of my challenges when we were looking at the phasing of the forecast was, is it realistic that all the infrastructure upgrades will be completed in the timeline that the fund has been set? So a lot of this funding is prescribed to 2023 or 2025. And my feeling is that in the last 12 months, public charging across France, Germany and the UK is playing catch up with the vehicle new vehicle registrations. And I don't think that is going to change anytime soon in terms of the ability to get the infrastructure in the ground in a timely fashion. It's going to come under further pressure. Then when you see that EV charge point ratio growing as a result of the fact that the infrastructure is struggling to keep pace with the vehicles coming to market, you then need to have more higher power charging infrastructure, both rapid and HPC, which may compound that issue in terms of the electrical infrastructure and the time taken to make those upgrades. Did that answer the question, Will?
It did, thanks. Okay, back to you, John.
Yeah, thanks guys. So yeah, we're rapidly running out of time actually. So there are questions that we haven't got to, but thank you for sending them in. Please do feel free to get in touch with any of the three of us, and we're happy to support afterwards. There was one final question, was around some of the assumptions we've used to develop our forecast, both in terms of the charge points, but also when we calculated the revenue from electricity sales. To be honest, there are many assumptions that we've used to develop forecasts. That's the nature of the beast. If you've got specific questions about what assumptions we've used, then yeah, again, please feel free to get in touch and we can share with you some of those numbers. So we're out of time. Thank you very much for joining. Great to have so many of you with us. And yeah, hope it's been useful, and yeah, hope to speak to you all, hopefully meet you at some point face to face in the not too distant future. So thanks again.
Thank you, everyone.